3 reasons why property will fall, according to Westpac. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein or cup of coffee. Let's have a look at this article from Yahoo Finance, written by Eliza Bavin. 3 reasons why the property market will drop, according to Westpac. Now, if you missed it, we did a live stream on Friday night, where, as well as celebrating finishing a project and having a few beers, I did my $400,000 property challenge, where I jump on Domain and try and find a $400,000 3-bedroom starter house in different locations. This week we did the Gold Coast, and it failed terribly. So then I tried to look around other parts of Queensland and didn't have much luck, everyone. So there's housing affordability now. It's just going crazy. Because it's been a few years since I've actually looked down the Gold Coast at property, and it's just going nuts. It is just going crazy. So let's have a look to see what Westpac have to say, because we have to remember we've had our first recession in 28 years. I'll bring up this GDP chart. First recession in 28 years. Property predicted to fall 40%, 10%, 5%. Every article was about property falling. They stopped tourism. International migration has stopped. The borders were closed, and there may be talk of closing them again. Locked down the entire country for varying periods. And what happened to housing? Well, it's up 22% this year, predicted to go up again 6% next year. And then it'll calm down a bit. We'll have to see. Never underestimate the power of the government to shower money upon people, particularly in an election year. The housing market in Australia is already showing signs of slowing down, according to Westpac. And I agree. People I've talked to and what I've been following, it has shown signs of slowing down, of cooling. But it's just been going so insanely hot. It doesn't mean, prices may start, they may start to shave off a little bit. But, even if we took a big slice out of property prices, what would we hit? 2019 levels where they were already excessively expensive? How long does it take now to save for a deposit? I think Tarek Brooker shared this on Twitter where I saw it. 16 years now, according to the ANZ Housing Affordability Report. 16 years to save for a house deposit in Sydney. 16 years. Now, if you watch Dave Ramsey, he pushes people to get a 5% deposit. Sorry. No. Wait. He pushes people to get a fixed mortgage, but for 15 years. 15 years. For the whole mortgage. It takes longer to save for a deposit in Sydney as it does to do a whole mortgage in Dave Ramsey's America, guys. Yeah, perfectly normal and fine. Sydney's not for normal people anymore. So, and it's only going to continue from here. The big banks has warned after the Commonwealth Bank predicted property prices would fall by 10% in 2023. Yeah, whoop-de-doo, 10%, okay. Oh no, a 10% fall. They're already so bloody high, it doesn't matter. Oh no, you bought in now in a property you intend to sit in for 20 years and it's going to drop 10%. Do you think people will care? Oh no, you're going to be in negative equity for 5 years. Whoop-de-doo. So, but what's driving the decline? Westpac outlined 3 main reasons in its monthly housing report. Okay, number 1, inflation. Westpac said one of the main concerns at the moment was inflation and the growing risk that Aussies would not be able to repay their mortgage if interest rates increased. For housing, few risks loom as large as those around interest rates, particularly when there is the potential for an inflation challenge requiring a more sustained and or forceful central bank policy response, the report said. Some of the most difficult periods for Australian housing markets, the early 1990s, 2007 and 8 to name 2, have been when the Reserve Bank was fighting an inflation problem. The RBA Governor, Philip Lowe, has been quite clear that the bank is not likely to raise rates in 2022 and may begin a gradual lift in 23 to 24. The bottom line is that while inflation has lifted, it is not seen as something that is likely to force the banks to a more aggressive tightening schedule, with official rates set to remain on hold near term, the Westpac report said. So while rates are not likely to rise next year, the impact of increasing inflation is putting pressure on the big banks and Aussie households. So snapping up homes is not at the top of the priority list. Okay, let's talk about this one. If we've got inflation and then the cash rate, which is, sitting at 0.1%. I haven't bothered updating this chart in some time because it's not moving. We're starting to see all of the major banks increase interest rates on their fixed term loans. CBA made a big move, hiking rates up 60 basis points. Now, there's people who'll be cheering, inflation is going to drive up, and then the housing will collapse because people will be forced to sell left, right, and center. I don't think that's going to happen for a few reasons. Hear me out. Here we've got, let's bring up some data from the RBA looking at the prepayments people have made. They've made substantial prepayments. And you've also got people who've got decent liquidity buffers. But what about those people that only got a 5% deposit to get into a property or got all government help to get into a property? Even if rates start creeping up 1%, 2%, the banks have accounted for that in their estimates. Okay, they're not handing out money as willy-nilly as everyone who's calling for more government intervention wants to make you believe. But here's the thing. What if you've saved up for a deposit and you've managed to scrape, scrimp, and get in there? You're paying interest now, which is probably less than the life you lived if you were renting and saving at the same time. You may be better off, even if interest rates go up. If anything, it's going to have an impact on people's spending, on discretionary spending. That's where you'll see it. You'll see it in the retail sector. You'll see it in people not buying as many luxury items or discretionary items. That's where it will manifest, not in housing. I don't think we'll see it in housing flooding the market. You'll see a cool down in people's purchasing ability, so the growth may taper or it may shave a little bit, but we're not going to see a drastic correction. By drastic, I mean some of those crazy modeling from the RBA and other parties. And then, you got to remember, they just need to hold on until the next government support mechanism. Hashtag mortgage keeper. I should just get the shirts made now. Number 2, a potential oversupply. Okay, first we're hearing of this. The balance between how many people want to buy a home and how many homes are available to purchase will have an impact on prices. If there are 10 people who want to buy a home but only 5 houses available, the competition will force prices higher. Well, I wouldn't say we're having an oversupply. We're having stock return to the market. But Westpac said we may be facing the opposite issue. Lots of properties and not enough people willing to buy them. Don't worry. This calls for 400,000 migrants a year to help deal with that issue. To address the labor shortages we're having here. Currently, the potential risk around oversupply comes from a combination of high levels of new building and an extended period of slow population growth due to closed borders, the report said. The report said Westpac was anticipating the amount of overseas visitors coming into the country would come through slowly, while approvals to build new apartments and homes had surged. Yes, but how much of that surge, and we've got these figures here, how much of that surge you can see there, that's home builder. A lot of that is home builder, guys. Westpac said the combination of the two may lead to an oversupply issue. So without strong competition from other buyers, prices won't be pushed higher. Okay, number 3. Investors. The appetite of investors to drag out the current property boom will also play a significant role in the direction of prices. The question here is less about whether markets might be knocked down by a sudden decline in investor activity and more about the potential for a strong lift to extend the current cycle, the report said. Okay, so this is with investors. They weren't hitting the market as much as the owner-occupiers. This was an owner-occupier-fueled property boom. A lot of it, I would suggest, is on the back of government intervention in the market. It's what our Australian government loves to do. It's what the people call for here in Australia, guys. We can get annoyed about it. We need an educational shift of our populace to realize that nothing is for free. Whenever the government hands out money with one hand, they're taking twice as much with the other. Their interventions always have a cost. And we're seeing that. Look at our housing market. Look at it. 16 years for a deposit, guys. That's not normal. But then again, perhaps an indebted population is a well-behaved population, everyone. So, generally speaking, where investors go, housing markets usually follow. The recent revival led by owner-occupiers is a rare counterexample, with owner-occupiers leading the way. The report said that despite this, affordability pressures were starting to weigh on owner-occupier demand, which has led to a small lift in investor activity. Investors look set to be a key swing factor for housing from 2022, on presenting upside potential near term if they return in mass, but also the potential for a more volatile cycle if this draws a more stringent response from policymakers, the report said. So there we have it, everyone. 3 reasons why property may fall, according to Westpac. Let's have a bit of a talk about this one. So what do you think, everyone, with their 3 reasons? Inflation, number 1, you've got oversupply of property, and investors, potentially not continuing it on. I'm skeptical of if it's going to have a significant impact. It may feel like it's having a big impact because it just puts a dent in the insane growth that we've had. The one thing I jokingly worry about is that the government realizes how effective lockdowns are in increasing depositability and then calling for lockdowns to save the property market, guys. I'm only half joking. So we'll have to see. Do you think we'll see a correction or just a cooling of the market? I'm more inclined to think we'll see a cooling. I think the government will do whatever they can to open up the country, even with this scary new Omicron. We'll have to see. Anyway, guys, thanks for watching this episode of Heise Says. Check out this recent video I did asking, where are you putting your money with all the cheap mortgages? Are people saving and preparing, or do you think they're, wasting it? Let's have a talk about that. Take care, guys, and I'll see you next time. Bye for now.